All right, good stuff. Good morning, traders. Happy Thursday. It is September 2nd, and I'm happy to have you with me here this morning. So let's get jumping in. But I hope you're all doing well here this morning. So, real quick, a couple of plugs, and then I'll hook you up with a watch list, all right? A couple of plugs and a watch list. So if you haven't already, I suggest you subscribe to our free newsletter. A lot of good stuff there. And then also for those interested, where are we here? You can check out the mastery. So, all right, there's two plugs. Newsletter and the mastery. And now let me hook y'all up here with this watch list. Try to give you a few goodies, right? All right, let me share this with you real quick. All right, there you go. And if you don't have Thinkorswim, I'll just keep the watch list up over there. We'll call that ITB squeezes. All right, there you go. There you go. Good morning, Terry. Good morning, Beverly. Good morning, Andrew. All right. So we spoke yesterday morning? Did we do anything yesterday? Try to get you guys up to date here. Yes. So yesterday, we did take profits on IYR. So nice move there. We did take profits on Apple, who finished the day a little bit lame, but we're taking profits there yesterday, and we took a position in SQ. I believe we took it yesterday. It's all a blur. It's all a bit of a blur. So for open positions in the mastery and the options room, we're long SQ, we are long a little bit of Snapchat, and we are long healthcare here. So that's what we're rocking with. Let's take a look at the futures. I'm not going to go into detail in terms of my thoughts here. I think we did a good job of doing that yesterday, but the market is super bullish, super strong. Path of least resistance is to the upside. I think the trend continues into September, October. Doesn't mean you don't get these dips to the 8 EMA or even a reversal back to the 21. So here is where I think you take your bigger position sizes. You take your profits into this push. Keep going long here. Personally, I wouldn't try to short the market by any means. Keep going long here, but I think you just maybe decrease position size a little bit. Maybe you give your swing trades a bit more time to work. That way, if the market does pull back to the 21, you're not giving back all the easy profits you made on the ride up. So keep focusing on bullish trades. I think those are going to be the easiest here. But you scale down a little bit. So with our trades in Snapchat and SQ, decent position size, right? Nothing crazy, but a normal position size, and we're giving the trade a good 30 or 40 days till expiration. That way, in the event the market does the unthinkable, which I say with sarcasm, and pulls back to the 21, we can comfortably sit there and Snapchat for a few days in case it comes down a little bit. So I think where you might be more inclined to take those trades that have 5-10 days to expiration is when you can find a setup like a Snapchat, like an SQ, but you're finding that setup and you're taking that entry right when the market is at the 21. So, last month we had trades in Facebook, Apple, Tesla, NOW, etc. That was the biggest thing working to their benefit. They were all good-looking setups, but the biggest thing here was you had the market setting up, and you had the wind at your back. So just take that into consideration. It wouldn't be a shocker if we just continue to grind from here, especially with a daily squeeze. Daily squeeze fires, the market can keep on keeping on there. Also wouldn't shock me if we get a dip at some point. So in terms of where I would love to buy a dip, certainly technology. So Apple, Facebook, Google, I would love to buy a dip. So with Apple here, we took a trade in the options room back here at the 21, and we took profits on the push. In the mastery, we took a position at the 21. We took profits on the push. You got to wait for the next dip at this point. Doesn't mean Apple has to dip. This bad boy could run to 156, 158. I'm probably not going to touch it up here. I want to get those entries at the 21. So I would buy a dip in Apple. We're getting long Facebook over here. Taking profits on this push, not getting long up here. So I would take a dip in Facebook. all day long, twice on Sundays. I would take a dip on Google. So I want to buy dips in technology. I like the semiconductors as well. This is my favorite spot, my favorite moment in time to get hot and heavy in semi stocks. I'd rather do it back here. So I do think a dip in the group could be a bit advantageous, but check out the weekly squeeze. I think one of the better weekly trends in the market, and the squeeze hasn't even fired yet. So maybe you don't get the dip, but if you do, I think you got to latch on here. Keep riding that weekly wave. So in terms of what do I like in the chip makers, I love NVIDIA. But I'm not going to buy NVIDIA at 2 or 3 ATR. We took a trade back here, took profits on the push. Took a trade back here, took profits on the push. So I'm a buyer of NVIDIA on a pullback to ideally to the 21. I'm a buyer of Broadcom here after earnings on a dip to the 21. And then you got good looking weekly charts all over the place as far as semiconductors go. So TXN, TSM, Qualcomm, they're all pretty snazzy. My favorite, though, is AMD right now. Really good uptrend. Pulled back to the 21 EMA. You're setting up in a brand new daily squeeze. Positively stacked EMAs. And then look at the 10x bars, or the labels rather. If they're green, it just means bullish momentum is increasing. So from your monthly chart all the way down to the 2-hour time frame, you got squeezes and got bullish momentum. So I like AMD here. In the better entry, quite frankly, it is down here at the 21, but it's not like it's extended like an NVIDIA here. So I do think you could get away with taking some shots at the old advanced micro device there. But those are just two groups I would like to buy on a dip. Real estate, we took profits yesterday, so that's done and over with. Communications, which is basically technology. The two biggest names in XLC are Google and Facebook. We took a position back here. You get paid on that push. You're not trying to get long at this point. Even though it could keep going, it's fighting that growing probability. It's going to come back down to earth. So I would buy communications on a dip. So technology, semiconductors, communications, I'm a buyer on a pullback. What I think you could look to get long now, one group is healthcare. Beautiful trend, but the difference is you're back at the buy zone. 3 days into a daily squeeze, you got bullish momentum everywhere, and you got some pretty decent structure within the group. Eli Lilly is a bullish daily squeeze. EMO here, let's not chase it, but that looks pretty bullish. So what we did in the mastery was just sold some put credit spreads here on XLV, and now we're going to step back and just see if the trend continues. So I think you can get long healthcare here. Obviously, manage your money how you see fit. So that is one group of interest, but the major thing I wanted to touch on this morning is check out the home builders here, right? ITB. Now, this isn't going to be as sexy as your QQQ, XLK, Facebook's, Google's, Apple's, Amazon's. I love those names. But in terms of just following trend and looking for good trades, look at real estate here. This isn't the most exciting group in the market, but you got daily squeeze after daily squeeze and a beautiful uptrend. Something I want to do a better job at taking advantage of. So with the home builders here, let's start with the weekly chart first. Is that not a beautiful weekly uptrend? It pushes away from the 21, and it comes back, and then it sets up nicely. It pushes away from the 21, then it comes back, and it sets up nicely. Easy to kind of start to ignore these groups when they go sideways for a good 3 to 4 months. But in terms of just a trend, that structure, this is absolutely picture perfect. Then throw into the mix, you got a weekly squeeze now. So we didn't just pull back to the 21. Now we're building up a crap load of energy here. Inside of the weekly squeeze, check out the 3-day time frame. The 3 days basically in between your weekly and your daily. Great push back to the 21, and there's a bullish squeeze. Inside of that, jabroni, you got a great looking daily squeeze here. So that to me is pretty attractive, right? And if we look inside the group, if we take a look inside, And I'll share this link with y'all too. It's in the chat. All right, there we go. So the biggest holdings in ITB. First, you got DHI, which I'm a little bit prone to like this, right? Dr. Horton, nice daily squeeze. It's simple stuff, gang. The group continues its trend into September, into October, into November. There's a pretty damn good chance this continues the trend as well. So there's a good looking daily squeeze, and that is the most heavily weighted stock in that group. Second place, so DHI there is about 14% of ITB. LEN is about 13.5%. So they're pretty much the same. Great daily squeeze. Now, I'm not going to get long before earnings. Earnings is, you got a couple weeks here, but that looks pretty good. Let's go through a few more here. They're all on this watch list over here. So BLD. That's a pretty solid squeeze there. MTH. Now, keep in mind, a lot of these names probably aren't going to be tradable with options. They're not very liquid. They might not have weekly expiration. The key here, right, because a lot of the names in real estate, they weren't quite tradable either. Crappy spreads, no options in general. But it does a lot of good for the group. You can just simply take a trade on IYR here, but it is working to your benefit that a name like ABT in that sector is setting up nicely. A name like PSA, which is part of IYR. So not only was the group in a daily squeeze, but all the big players in the group, same exact setup here. What was the other one? There was DRE. These are going to be some of your best swing trades when you're catching a group move. Not just, a good-looking stock, but a good-looking stock within a sector that's getting ready to go for it. So back to ITB here. LEN is pretty clean. BLD, pretty clean. MTH, pretty clean. My preference here would be DHI, simply because it's the most heavily weighted name in the group. Sherwin-Williams, though, it's bullish, right? Is it sexy? Maybe not, but is that not a great trend? You got Home Depot, you got Lowe's, you got a few more here, but the point being, something to pay attention to. This group is in a really good looking uptrend. You got great structure here to your daily chart. A lot of the players within the group have just as good of a structure to their daily chart. And when that's all happening inside of a 3-day and a weekly squeeze, I think it's worth a shot there. So in terms of how I'm probably going to look to trade it, with the mastery, let's see. Now the market's extended, right? So this probably leads into a good discussion in terms of risk management / structure of a trade when the market is potentially a little bit cooked. I'm going to take bigger position sizes, and I'm potentially going to go a little bit shorter till expiration in my trades back here. Not up here. Up here, I got to play a little bit of defense. I got to keep getting long because we're in an uptrend. I got to keep getting long as the market is bullish. However, what I got to do is make sure if we do pull back to the 21 EMA, I'm not giving back all the easy money. So with something like ITB here, the first adjustment I'm going to make is I'm not backing myself into a corner where this squeeze has to fire by like next Friday. Because if that market comes in just a little bit, it's probably going to drag this with it. Now, in terms of the structure here, this bad boy could dip to the 50, and I still like it. So I got to give it time. And I'm not going to take a 10, 12% position size. I'll do that when the market is setting up at the buy zone. Not here. Not here. So I would have no problem going out until October 15th. And keep in mind, you don't have to hold it until October 15th. You sell a put credit spread, this thing rallies up into 78 over the next 2 weeks. You're taking home your profit. You're going to get your 70, 80% of max profit. So you're not dedicated to that expiration date. But let's take a look here. Let's take a look in a book. Now, I'm looking for a 2-to-1 risk-reward ratio. and I want to go as far out the money as freaking possible, so long as I can get that. So we'll start the discussion out here at 70. And how do I want to do this? Just let me play around here for a sec. You know what might do the trick here? Go a week beforehand. All right. What do you got, baby? See, 72 by 70, a whopping 50 cents. It's like a 3-to-1 risk reward ratio. About 72 and a half. Something of this nature. Just about a 2-to-1 risk reward ratio. I'm going to have short strikes down here at 72 and a half. Let's kind of go line that up on the chart. All right, so not too deep out the money. Yeah, you're basically here at your 21 EMA. So I would say, this isn't an Amazon. It's not a Tesla, a Google. There's not going to be all kinds of crazy premium here. A Tesla or a Facebook, if you're going out 40 plus days till expiration, you can go pretty damn far out the money. A lot of times you're going to be under -1 ATR with your short strike, and you're going to get yourself a 2-to-1 risk reward ratio. With a lot of these ETFs here, just look at the chain. Let's compare this to, say, Amazon. You go October 8th expiration at the money, puts on Amazon, they're probably going for like $4,500. So there's not too much premium here. We can get a 2-to-1 going to 72 and a half, but quite frankly here, it's like an average true range of cushion. So that's not too bad. You might go a little bit closer to the money here. You're giving it plenty of time, so there's nothing wrong with that. Something like that. If we're looking at, say, DHI, let's check out Dr. Horton here. In the money calls aren't too bad. Decent spreads. I've seen worse. I've seen better. But let's line this chart up. Could we get a good risk reward selling puts maybe at 95? Kind of plant them there under the 21. Well, let's take a look. Yeah, not bad. So, premiums will change in the market opens. You dip a little bit here, things get a little bit better. If you like the group, go about it how you see fit. But that is my general suggestion here. I like how the group is setting up. I like how basically the top 10 holdings in the group are setting up. Could be something to do here. Could be something to do. And that's what I got for you, gang. I got to be in the mastery here in 10 minutes. So try to answer questions real quick. But just to rehash, I would buy dips on technology. I would buy dips on semiconductors. I would buy dips in communication. I'm long healthcare now, and I think you can do that if you'd like. And I'm looking for some Bob the Builder exposure here. I like that setup. Waiting for a dip on Tesla. Big time. Waiting for a dip on Tesla. And that is about it, my friends. So let me get caught up in the chat here. Warwick, the one thing that out of curiosity, Warwick, if you've ever unsubscribed from Simpler's newsletters in the past, or taken your name off the list, so to say, that might be it. So reach out to the homies over there, and I'm pretty sure they can just get you on the list for nothing but our newsletter, if that's what you would like. Dr. Steven, shop is great here. Shop is really solid. I like it a lot. And notice how the histogram here is finally going positive. So, right, you get the pull back. It's a little bit choppy here, but it did a great job of holding up. It never closed under -1 ATR, so generally it was just a lot of noise here. And now as your histogram goes back to positive and you got a good squeeze here, I like it. I really do. I like it a lot. Beverly, I appreciate you. Mohammed, I like Snapchat. So we're long Snapchat in the options room over here. And we got put credit spreads that expire all the way out in October. So we're giving it plenty of time here. Look at the histogram and kind of compare this to Shopify. Chop went through the rotation. Right? Negative momentum with the red bars. That negative bearish momentum starts to dry up a little bit with the yellow bars, but now we're turning the corner. Right? Now you got some fresh positive momentum here. Strikes me as something that could be getting ready to go now. And if you got a 4-hour chart, a 2-hour chart that look just as bullish, I think it's setting up getting ready to go here. Compare that to Snapchat. We're only going through a slight shift here. We've only seen a slight little dry up in the bearish momentum versus bullish momentum. So my only advice here, and then hey, take into consideration the market's a bit extended as well. I think you give a swing trade on Snapchat plenty of time. That's just my advice. Now, if you get long with say 30 days till expiration and it explodes next Tuesday, well then you're like, well, damn, I wish I had, this Friday's expiration. I like the structure. I like the trend. I love the weekly chart here. I think you want to be long Snapchat so long as we're building that daily squeeze on top of that weekly 8 EMA. You got a big weekly squeeze here, dying to let it loose. And I think that daily squeeze is what could give you that burst of energy. But give it time. This could be something that spends another week, 2 weeks, squeezing, chopping, going through that shift of momentum. Or it makes my life easy and just goes ape crap here. But I like it. I like it. Todd, I would say an average number of trades for me is probably no more than 5. Now, keep in mind, I'm balancing, options room trades and mastery trades, etc. But generally speaking, I think 5 is pretty manageable for me. I don't think there's been a single time this year when I've had, probably not even close to 10 open positions at any given time. Shafir, thoughts on Crocs? Comfy as hell. In terms of the setup here, nice. Really nice. I'm stealing it from you. Let me not get it on that list. Let me get it on the other one. Great find, though. This is beautiful. And we'll update this today. Yeah, that looks great. You got trend, you got structure, you got momentum. Does it mean a trade works? Absolutely not. If you get long 100 setups like this in a row, you come out on top after the 100 trades. I'm a firm believer in that. Think about what you're doing. You're playing an uptrend, and you're just jumping in as it's catching its breath, right? Then you catch a resumption of the uptrend. So I like that a lot here. That's really clean. Looks like earnings isn't creeping up on us either. That's always nice. Joss, I do think Wells Fargo's an overreaction there. Here's what could really work in its favor. Check out the group. Regardless of what Wells Fargo did yesterday, does XLF not look pretty bullish here? It's pulling back to the buy zone. You got a brand new daily squeeze, literally brand new, but then check out the weekly chart. But this is all really bullish here. So if the uptrend for the financials as a whole continues, doesn't mean Wells Fargo has to bounce back, but it's going to be tugging on it like a magnet, so to say. It could continue to sell off, but 30 days from now, if the financials as a whole have continued their uptrend, in my opinion, the probabilities would point towards this at least bouncing back towards the 21. So I do think there could be something there for sure. I'll tell you where I would get long. If you were to bounce and close back above your weekly 21, I would get long there. Because look at the weekly trend. Even if we close below the weekly 21, nothing's really happened here. But I'm telling you bounce back above the 21, that's bullish. That's really bullish. So I like that. There could be something there. In the group as a whole, there's something I'm going to keep an eye on as well. All right, we'll do a few more here, team. I got to get into the mastery here. So regardless of the stock, the trade, or anything, I always get long at the 21. And I always take profits on the push away from the 21. So just based on my rules, I'd be waiting for a pullback before I could get long here again. Which, keep in mind, this means I'm basically missing hundreds and hundreds of moves every single year because I'm only looking to get long here. It's just that the ones that I do take, they tend to work in my favor. Damn, I wish I was getting long back there, though. There's some crazy moves here in the market recently. Jordan, the two best places to learn my strategy. The first place would be the class that I just did with Simpler, which I know is available on the website. In terms of continuous learning, and working in a tight knit group and just kind of going at it together daily, I would say the mastery. So, I suppose my advice would be, if you're looking to learn a few basic concepts and then kind of take the ball and run with it on your own, I think the class is going to set you up nicely. If you're looking to kind of do the day-to-day operations and start running your trading business with a group of traders looking for the same kinds of setups and results, then I would suggest the mastery. And in the mastery, we're live in there every Thursday for the first hour of the session, and then we do an additional live trading day once a month, which is probably going to last us 2 to 3 hours, the way that I can ramble. But with all that being said, gang, wait for your pullbacks there in technology, semiconductors, communication. Keep an eye on healthcare and ITB. And I will talk with y'all on Monday. Little brother Chandler is going to take the reins here tomorrow for the morning prep. So good stuff this week. I hope I've given y'all a few things to take into consideration here. And I hope you finish the week strong. I'll talk to you all soon, though. I appreciate your time as always. Be good.